According to a recent survey from the Federal Reserve Bank of Philadelphia, the share of Americans paying their credit card balance late is on the rise. So here to explain more about what it means for the economy and for us is Michael Hershfield, founder and CEO of Accrue. Michael, welcome.
Thanks for having me.
Perfect timing on this segment because we got that Fed decision tomorrow, that two-day meeting starting today. What is the status of this for Americans?
You know, the reality is that many Americans are dealing with credit card debt, over $1 trillion of credit card debt in the United States. And with interest rates so high, that's a real pain on the average American consumer. So we're seeing a real K-shaped economy. So many Americans feel good. You see wage inflation has gone up, which has been amazing. There's still real pain for the average American consumer with credit card debt.
So how can a consumer use your services at Accrue to help them better manage their finances?
So we partner with merchants to offer a debit savings solution to consumers. You know, for 30 years, Americans have seen credit options, buy now, pay later, co-branded credit cards offered to them to buy now. I really believe that for many Americans, they want to save. 30+% of Americans are saving for travel right now. 60% of Americans are actively saving for cars, a pair of shoes. And there really hasn't been an offering that merchants offer them that's not credit, and that's what we do by partnering with retailers to offer that solution to consumers.
So what should consumers be looking for when the Fed gives its decision tomorrow? What key clues, words, terminology could give them an indication as to where these fees and these rates are going?
My hope is that interest rates will go down a little bit. I mean, when you look at American consumer psychology, you see that debt particularly makes people struggle. They have real mental health issues around debt. So my hope is that there's going to be a drop of interest rates here, a potential drop in the interest rate, to give consumers a little bit of a slack because we feel that pain. Delinquencies have risen. I don't know if we saw recently, we saw that with Capital One. There is a rise of delinquency rates for the average American consumer. This is a signal that some Americans are really struggling, and some of them really want to save up for things and not use credit to make purchases.
What advice would you give to an American who is struggling with credit card debt and how to take control, right? Your company is trying to help them take control of that. But for anyone who is struggling in the initial phases from those mental health challenges, what would you say to them to encourage them to use a product like yours?
Well, it's a really special time. I mean, the rise of FinTalk, the rise of loud budgeting has made it okay to talk about people's finances.
Right.
And clearly, like companies like us, we're the first ever savings wallet offered by retailers. There's a wave of empathy that is really taking shape in the U.S. economy. It's not just about spending right now and getting money right now. So first off, we have to start with empathy. And reality is American consumers look at their credit card debt and say, what do I need to pay right now? At least pay down your minimum every single month. Very, 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 very important.
How does this impact broader financial goals, right? Like your credit score, the ability to buy a house, even perhaps get an auto loan?
Yeah, I mean, short-term consumer credit is painful right now for the average American. Interest rates are so high. You know, if you're 20, 25, they're almost 30% in interest rates for your credit card. That's very painful for you if you can't make payment. And so you have to be really careful to make sure that you're spending on your essentials. So for every month, Americans need to look at their budget and say, am I spending on what I need right now versus what I just need to push off for another month? Really important to be conscious about your spending. And I think we've really in a special time with loud budgeting, with FinTalk, this empowerment of knowing what matters for your family.
So we have seen inflation come down a bit, but still above technically the Fed's long-term 2% target. Wage gains, by and large, have been rising, but probably not every American per se has felt that, and we've seen layoffs this year. In terms of the path forward, do you expect it to get easier or harder for those who are trying to manage their debt right now?
My hope is it's going to get a little easier. It's going to take some time, obviously, because inflation still is a pain in the American economy. So it's going to take some time before interest rates start to drop, in my opinion. And this is where there's the consciousness that the average American consumer needs to be around their spending to make sure they're spending on things they need versus stretching themselves in credit card debt, potentially with auto loan debt. Because of the rise in delinquencies, we have to be more conscious of how they're spending their money.
How long does credit card debt follow someone?
For years. It could be for decades. It's hard to chase. When we think about even student loan debt, auto loan debt, the reality is that our debt travels with us. And if we're unable to pay it, we have to find every excuse to work through it, to partner with potentially with your credit companies to make sure you're paying down things at the right time.
But It sounds like, right, there is hope, right? So we're seeing inflation come down,
Yes.
as we mentioned. And on top of that, borrowing costs expected to come down as well. So hopefully some relief for the everyday
Yes.
American
Yes.
is on the horizon. And thus that in turn would, I'm sure, benefit the stock market.
I'm no stock market expert. I can tell you, just obviously, in my opinion, obviously we're a company that's raised almost $4 million. Tremendous support Accrue Savings had. I think retailers are starting to realize that just offering buy now, pay later and just offering co-branded credit cards may not be in the best interest of their business, but most importantly in the business of the consumer.
Yeah.
And so we think like that hope that merchants can offer a diverse payment option is really where things could go in the next few years.
Do you see different trends across generations? For instance, that Gen Z, millennials, baby boomers, Gen X, that they have different needs when it comes to this?
There's no question, sorry for interrupting, there's no question that American Gen Zers and millennials have more credit aversion. I mean, yes, we've seen a little signal of millennials getting more comfortable with credit options, but there's a real move for Gen Zers and millennials to be more sensitive of how they spend their money and are really avoiding traditional credit cards. And that's another interesting signal as we look forward to the future.
Good to talk about it, right?
It's so
Feels
fun.
liberating.
It feels fun. Things are changing.
Yeah, and hopefully for the best. So, Michael, we appreciate the work that you're doing.
Thanks for having
That's
me on.
Michael Hershfield, CEO and founder of Accrue. Thank you.
Thank you so much.